Okay, so today, Friday, let's talk about Takachi in Japan. She's been, elected. She's now in office officially. She met with, I don't know how to pronounce it, ACAN, the organization. She met with Xi. She met with the people from South Korea. Now she's home. Okay, we know what she said before. She believes that interest rates should be much lower. Forget the inflation rate. She believes that the government needs to spend money and and boost the economy. So let's go through what's going on in Japan because, as you see, it's going to affect us. So here she is. She's in office, and the first thing she's doing is she's working on a $65 billion economic stimulus package. Now, in Japan, for the last 8 years, I believe, they've been working on what we call supplemental budgets almost every year, difference in size, biggest years being COVID, okay? And she's instructed her ministers to devise a stimulus package called it in three pillars of ensuring security of livelihoods, addressing rising prices, and realizing a strong economy through crisis management, investment, and growth investment. Okay, and listen, the key words here are crisis management investments. These are key because this is the five factors. In other words, as the world is rearranging itself from globalization to, let's say, regionalization at this time, you have to figure out how you deliver the five factors. And if you don't have one or two of the five factors, you have a choice. You can either sign up with an ally or you can do it yourself. And when you say do it yourself, it really comes down to it doesn't matter what the budget is. Look at America. We have issues with our budget. We have issues with our debt. Is there anybody in our country who doesn't believe that we should now spend $1 trillion on rare earth minerals? Not me. I would say yes, but we need a plan. We need a strategy, not this thing of going around and just buying, give them companies money. But crisis management investments is another words for how do you address the five factors for each country. And so she's also told them, don't worry about exceeding the 13.9 trillion yen supplementary budget if it is necessary for crisis management investments. And I stop and read what she's going to spend the money on. It doesn't matter to us, but the last paragraph does matter to us. Crisis management into stimulus, focusing on advanced technologies like AI, semiconductors, nuclear fusion, and strengthen economic security. Okay, the five factors. And like the U.S. is now speaking about it, I don't know how we're going to do this, but she now wants a government-led fund, sovereign fund, with about $1 trillion yen in it, which is to help build ships and anything else for crisis management investing. All right, so that's where they're at. Now, a couple weeks ago, Besant came out, wasn't asked, and he said, hey, we should let Japan hike before the market forces it to. All right. And this is about global plumbing. And we know what we want. So the USA wants the dollar to go down around 20 to 30%. It wants the yen to go up 30%. We have told them that, all right? Now, the problem is they've had zero growth now. So sending the yen up 30% makes no sense to Japan. Makes total sense to the US, no sense to Japan. Raising the interest rates when they have zero growth rate makes no sense to Japan, makes sense to the United States. That's why we're asking for it. So I want you to read through Endgame Macro here. I'll give you some more on this and read what he says. We're not here to discuss that, but it is critically important for the global plumbing. And again, stop and read, but the last paragraph is, this is diplomatic language about anchoring inflation expectation. This is about control. Control the yen, control the US bond stability, and control the funding system that's been quietly stretched for years. We're talking about the yen carry trade, all right? Now in the Nikkei, Asia Nikkei, or Nikkei Asian, I think it is, all right, today, they say that Japan is not immune to the trust shock. So what was that? Liz Truss came in and overdebted the economy. And so what did she say? We're going to, I think it was just around $65 billion in a stimulus package, which was tax cuts for the oligarchs in England. And then she said, and we're going to look for how we can spend another 40 or 50 billion pounds on the poor people when we can figure that out. The markets rejected it. Truss was forced to resign and to save their economy because it just didn't work. And what they're saying here is, which we have talked about in many videos, the West, all of us are basically in the same situation. Slow growth, highly in debt. Our annual fiscal is in debt, at a deficit. Our central bank balance sheets are at a deficit. So we all kind of have the same issue. So what are we going to do? We need more money for crisis management investment, trying to figure out our own 5 factors. How do we do that? So you can see here and read about what they say. The BOJ is moving towards a monetary tightening cycle. Remember, Utada was brought in. He's an academician. He came in to make the interest rates in Japan normal again. So he raised them up. Now they're at 25 basis points or 50 basis points. They were negative for 9 years. Okay. But now you have a government who's coming in and saying, we're going to do more fiscal spending. So it's like, what do you do with these situations? Now, I will say there's a difference between the UK, and they point this out. 90% of Japanese bonds are held domestically, where like 90% were held internationally by the UK. So not much they could do. All right. So what do you watch? You watch the yen. Now listen, gold and silver's kind of slowed down here, okay, and had a slight correction compared to where they were. Not important. My point on that though is this: the currencies for the last month or so have been basically flat, not going anywhere. All right. And this means that, we're not really sure how this competing policies are going to work out. I would say now that, and most people go read the Endgame Macro, they don't believe that Japan's going to raise their interest rates through the end of the year. And Utada said he's not going to raise them until January, February of 2026. Okay. So they're holding off on raising them because they have a brand new prime minister. She believes, and what cracks me up about Besant saying this, she believes exactly what Besant believes. Forget the deficit, forget the inflation rate, lower the interest rates because we have to pay that and that helps us with our deficit. So what he's telling the Japanese to do is an exact opposite of what he's telling us, the Americans, that we should be doing. So Besant is willing to undercut the Fed, make the Treasury our new Federal Reserve, and go against all economic rules, and then tell Japan, go follow the economic rules. You go figure, okay? So you want to watch the yen, and if the yen starts going down, which means up in price, okay, but down in value, so if it hits 160 or above, there's going to be real issues here. And why would it go down? If the budget comes in, it comes in at like 65, 70 billion dollars. How does the market react to that? We're going to find out. Which leads us back to the 10-year. All right. Now this was just 171, I believe, yesterday. Okay. So we need to watch this. If this continues to move up to, let's say, 180, 190, what's happening is every single day, the Japanese are intervening in the currency market. And how do they intervene in the currency market? They sell their treasuries and they buy the yen, right? Because they own 1.1 trillion in treasury. That's what they're doing. So the West, we're all faced with kind of the same scenario. It looks like Japan is going to be the first one up the bat, which then could affect the yen carry trade. So does the yen go down? Do they raise the interest rates and drive the yen up? I don't know. What do you think? She's definitely gonna do the spending, so that's coming in. I think yen down. What do you think? Like and follow. Tell me in the comments.